Hello and welcome back to Money Discourse. Coming up, the debt ceiling is done. And is the recent run in Nvidia the real deal? Rajan, why don't you take it away?
It's good to be back, first of all. It's been actually really tough to get these in. Although I've been updating the Twitter page, if you've been looking at that, but it's been, it's tough to keep on getting these in weekly, but it's good. There's just every week, there's just so much going on. And this time it's just the debt ceiling agreement. And it looks like in principle that they've come to a deal and it's pretty much in line with what's been speculated. Looking at some of the aspects of this deal, that they're going to keep non-defense discretionary spending roughly flat, and spending on defense and veterans is going to go up about 3%. And then they're going to use roughly $29 billion of COVID aid that was not used, and they're going to reappropriate that. And so, all in all, it looks like Biden got a little bit of what he wanted, and obviously McCarthy must have got a bit of what he did. But the thing is, it's now trying to get the vote through to the House. So, there's obviously some GOP members that are not satisfied with this deal and likely to vote it down, but it's about getting enough majority, because they got till 5th of June. So what's that? That's like next Monday, right? Next Monday, Tuesday. Well, not this. Yeah, so about 1 week's time, and to get it through. And if not, then the unthinkable. That could be the real spanner in the works. But the thing is, judging by the way the markets are acting, and we've had a couple of big day rallies in Nasdaq. Although I don't think it's really that much to do with it, and it's just large cap in general. But in general, the market is now pushing above 4,200 in the S&P, and yeah, so it looks like this is going to go through. Also, you've seen some stuff in China as well. Like, one of the things, if you actually notice, a lot of these companies that reported, and especially in the back end of this earnings season, a lot of it, they're waiting on China recovery, especially a lot of these retailers, because all the expensive stuff, like China generally is like a big consumer for that type of stuff. And so there was some data that came out that saying that the Chinese tourism arrival was expected to exceed 1 million year to date. So you can start to see that the reopening of China is continuing to happen, which is going to help quite a few of these retail stocks. And just in general, because China obviously is a massive economy. And so I think that's going to put a bit of a tailwind in a lot of these stocks if China continues to, let in tourists and stuff like that. And then afterwards, it's been really interesting watching these earnings on the back end. And we talked about, we're going to talk about Nvidia, which obviously had a monster move. But Snowflake was down some ridiculous amount. That had a huge move. And then you had Twilio, Splunk. And then you had all the retailers. So Walmart was really good. Target, not as much. Kohl's went up a lot. Abercrombie, they're liking these, the muscle fit t-shirts, I guess. So those are all bets. Abercrombie had a real good quarter. So you're starting to see a lot of these back end stocks really having some big moves. But that Nvidia, I think that either some people made years money or got taken out to the cleaners, because we ran. I actually went long at around 120, 130, and it went, now just scaling out on the way back, as is my general strategy. And then I got out my last bit at around 235, and then next thing you know, it's now coming up to 400. And I was like, oh man, it's so frustrating, that Nvidia. But if we look at, let's just add this, just taking a look at this S&P, and then you can see that again, we've consolidated quite a bit, and we've had that big move up, and we're back towards this 4,200 level. And then this point over here, if we look over here right now, that's 4,300 is the high that we reached last August the 16th. So let's just see if we can tap that. But it was an interesting point that if you look at this, the Kobayashi letter that I don't know, some of you might be following on Twitter, and if you actually take out Meta, Amazon, Microsoft, Apple, Google, Nvidia, and Tesla, the S&P is only up 1% this year. So it's pretty much 6-7 stocks. So these 7 stocks are responsible for 44%. Basically those 7 stocks alone in the index are up 44% this year. And so then the remaining 493 companies in the S&P are up collectively 1%, which is crazy. So it's like you can see this index is very, very skewed, and those big caps are now just becoming bigger caps. And Nvidia, company that does less than 10 billion revenue a quarter, although next quarter, what we'll talk about, they expect it to go above 10 billion, is almost $1 trillion company. So it's just wild what's going on. But realistically, if the rest of the index don't follow through, I don't really see how we can keep on going up, because these 7 stocks have had some monster moves. So the question is, can the rest of the 493 companies start making a move, or is it going to all be suppressed? And if that's the case, then I can see us just staying in the range, just like what I thought. It's going to be a range bound year. So this is where we're standing right now. yeah, so but Nvidia, that was a crazy one. What did you think? What did you think about that?
Yeah, well, this AI hype train has really started, obviously, with the hardware that's going to be powering most of these data centers, abilities to allow, consumers like us, as well as these big, large, massive corporations, kind of to democratize the training of these AI models. You have to be using AI hardware from Nvidia. Also, other stocks like Palantir, you've seen what's been happening to that stock in the last year. I mean, sorry,
Yeah.
in year to date, it's up like 113%, obviously coming down from its all-time highs around, the 40s, where it was way overvalued. But now it looks like big money is really pushing these AI stocks higher and higher. The seed of this was all planted because of ChatGPT and all the amazing things that it can actually do. And there's a lot of talk about this being a massive overhype into like AI, and it's all going to kind of do another 2000 burst down the line, I guess. But the difference between then and now, I think, really is that the technology is here, and it's not just like in the 2000s where all you need to do is put a .com at the end of your name and you would get some crazy valuation. Now these are actually tools that are changing people's lives, changing workflows. The productivity of developers is just going through the roof with all of these tools. Rajan, even you yourself use Bard and ChatGPT quite a lot just to help you out in your tasks. And it's just a huge boost, like they say in the All In podcast, that these 1x developers, junior developers, can become 10x developers just by using these tools. So there's serious tangible benefits to what AI is going to bring to us. And so maybe Nvidia has taken a massive run up, and the traders will trade out of it, and it will maybe have a slight retracement. But I think that it's going to be like how the big tech giants of today, over the last 1 or 2 decades, they've just had a massive upward trend, and I think that's what's going to happen with anyone involved in AI and AI hardware. However, which stocks to be bearish on, you really have to look at who are the ones that are going to be disrupted by this as much as possible. So like the software packages that don't really use AI, maybe like say Intuit or something like that, potentially there might be some startups out there that will just do all your taxes for you and you don't really need to do much, just link it all up. Or maybe Intuit will incorporate AI, and then it can even run up further. A good example of this is if you look at the Photoshop, the beta now, how people are saying Adobe's done, who's going to need Photoshop anymore, because these AI tools can do all of this stuff for you. But now if you look at the demos that they're putting out there on Photoshop, it's just you just highlight an area and then you just write in, hey, add a frame here, or remove the sky and make it dark, or like you can write all of these things. So they actually using AI to enhance the existing software suites that they already have. So you have to be really careful here, because we just don't know. There's so many advancements happening every single week. You can't really even keep it on top of these things. But what horse to bet on right now? It's really hard, because there's no end defined state that it's going to be. Like how Google took over the search engine market and pretty much had a monopoly there. There's no such monopoly for AI yet. There are the tools that people are using, and obviously you've seen it with Microsoft announcing that they're putting in their ChatGPT AI components into Windows, and obviously we saw that they're putting it into Office. So once that goes mainstream, that could be just a game changer. And
it's funny you say that, because there was this Economist article that I came across during the week, and they're talking about the biggest, just like you were saying, that how there's quite a few monopolies right now, like Google's got monopoly on search, and monopolies or duopolies or whatever. But in AI, because of the tools that are available, and a lot of them are like open source, that there will be a lot more smaller players that can get into the game than before. So there's so many more players that can actually come into it, that it's not going to be a plain the big company wins. It's going to be like a whole bunch of little players that all going to have their own derivative in different spaces and this and that. So this is going to be a pie that's going to be much more spread out, according to some people, than in previous, technology rises. And I think this has got a few of the big companies a bit wary, because you've got to be riding with it straight away. But but the one thing is that all the hardware required, all of this, one thing AI needs is just a lot of data processing, and then this is where Nvidia is just ahead of the game, right? So it was fun. If you look at their if you just look at their earnings, right, it's absolutely, it's not the actual earnings which were that good, because if you actually look at it, like the revenue was around 7.2 billion, and that was ahead of consensus. But if you look at it year on year, it's down 13%, right? And then if we go on the non-GAAP for the profits, right? So operating income was 3.05 billion. That was down 23% year on year, although it did grow quite a bit on a quarter-on-quarter basis. But the net income as well down 21%. EPS was down 20%. So I mean, although they all beat estimates, but it was nothing to really write home about in terms of the actual that quarter numbers. And if you look at data center, which was their biggest thing, that's 4.28 billion. That was up 14% year on year and up 18% from the previous quarter. So while all the other metrics were down on a year on year basis, so if you look at last year, 8.3 billion was the revenue. This year 7.2, but it's the data center revenue which has been expanding, which was the primary growth driver. But then when you look at the guidance, now this is where it went nuts. Like pretty much everyone who's in the game pretty much knows that second quarter guidance is expected to be 11 billion plus or minus 2%. Now the expectations for the quarter was around 7 billion. So they guided $4 billion above estimates. Now I've never seen something that I remember when I saw this, I'm like, have they got a new segment? Have they got this? Have they got that? But it's just, this is pretty much largely driven on the data center demand that they're seeing. They're seeing this visibility in the short term where they're seeing pretty much throughout the whole, the demand that they're getting for the second quarter plus this back half of the year, it's just insane. So they're seeing 11 billion, which is 4 billion above estimates. And I think they were saying that the run rate for the consequent quarters are going to be roughly the same. So if you actually look at what Nvidia's full year revenue forecast was for next year, initially it was around 40 billion, 44 billion. Now it's gone up by 10 billion from analysts. And so, and it's all just driven by data center basically. And so the real question is how sustainable it is. Is there anyone else that can even disrupt the space in the short term anyway? Because I mean, Nvidia's looks like it's got, everybody running for their, their solution at this point, which is just pretty crazy. And, you look at their gross margin for next quarter on a non-GAAP basis, 70%. That was about 300 basis points above expectations. And then the operating profit, it's just everything just looks like it's going to go wild. And if you actually look at, this was the, tweets. Yeah, so that move up in Nvidia added $220 billion to the market cap in 1 hour after earnings. And the market cap for AMD, 175 billion, Intel 120 billion, Micron 73 billion. Now that is just absolutely crazy how pretty much you add, it was funny. It just goes, they just added the entire value of Intel and Micron combined on that one move up. It's worth 900 billion. Just absolutely crazy, And then, so I mean, it's pretty crazy. I'm going to show some estimates. So if we look at, here it is. Yeah. So I don't know if you can really see this. Let me just zoom up on it. Let's go to 150%. So these are some estimates that are pulled out for like Q2, 2024, 25, 26. And then you can sort of see now that revenue is expected to increase 62%. This for Nvidia. Analysts got them around 10.9 billion and their guidance, if you iterate it out, is about 10.8 to 11.2. The EPS now seen at $2. That's up almost 300%. But you look at where the revenue is coming from. Data center, so 83% gain year on year. So 7.9 billion. So that's pretty much 75 to 80% of the revenue just made up by data center, which is 106%. Whereas gaming is expected to only increase about 13%. And then if you go out through the years, again, like the full year revenue in 2024, which is this year, is 43 billion is the forecast, of which 30 billion is data center. Next year, it's supposed to be 54 billion, data center accounting for 40 billion, and gaming 10.9 billion and 4 billion, everything else. So like you see gaming is slowing, and then in 2026, like gaming's pretty much flat at 11 billion, but data center is going up another 41% to 42 billion, accounting for about almost 70% of the revenue seen. So I mean, 64 billion in revenue is now the forecast for 2026. So I mean, I think the real risk here is just that these are pretty lofty numbers, and whether they can keep up with this level of trajectory, and if they ain't going to be a disruptor in the space, because it seems like the way Nvidia's priced, it's like for 3 years out, 4 years out, that's what they're pretty much just going to grab everything, which I don't know. I'll rather take the other side just because of my contrarian nature. But this is what the analysts see. This is what the estimates are. So it's going to be interesting. But at this valuation, $1 trillion, it's a big number. I don't know. I think if you're in it already, that's great. Hold, take a little bit off, or do whatever. But when I want to buy it at $400, I don't know.
Yeah, it's a tough one, and we really have to see how well these hardware providers would actually keep their superiority over their competition. Because whenever there's like this type of margin that Nvidia, are taking with their chips, there's going to be a lot of people gunning to, get behind it. Because the thing is, where you get a moat, where you get something that's kind of monopoly like, is where you have the hardware and the software together working. But the thing is, Nvidia are just doing the hardware really, and it's up to everyone else to kind of train the software. So yeah, to be honest, I don't think I'm not saying that Nvidia is going to go down. Obviously, it's hugely valuable, and it still will continue to be a massive place in the whole advancement in AI. But it's just when it gets disrupted, because rather than if. So yeah. Anyway, Rajan, what are you thinking about the broader macro market? Looking at the CME, looking the next Fed meeting, that they're kind of going to push up rates again. And if you look at what the probability was on the 22nd of May, it was kind of 75% almost staying put, but now it looks like everything is kind of flip-flopped over into I guess that we're going to go for a rate hike. So what do you think?
I'm shocked. I genuinely thought like the terminal rate had been reached, 5.25%. That was a lot of where the dots were pointing to for a lot of the members. And given that the rate of which inflation is, well, according to the data anyway, has come down, I just don't see what the benefit will be of doing another quarter of a basis. Like what is so incremental at this point. If the current pace of rate rises and the current rate doesn't do or doesn't have the intended effect, I don't understand what quarter point is going to do, But I mean, these mortgage rates are going up quite a bit. I'm seeing that some of these mortgages going back to 6.5%, 7%. This, and we've spoken about this before, right? That the problem in the housing market, like the bubble is not bursting as in terms of home prices anyway, as some would have thought, just purely because it's just a very weird dynamics and there's factors at play that haven't really presented themselves in the past to the extent of which they have here. And it's like, I can use myself as an example, the house I live in right now, locked in a sub 3% mortgage, 30-year mortgage. And the thing is that if you want to move, you pretty much have to give up a 3% mortgage and go to 6.5%, 7% mortgage. And how many people are really going to do that?
Especially with the affordability completely changing as well. So meaning you'll probably be able to afford unless you've got a larger chunk of cash to put down, or
that's the thing. If you're a cash buyer, you might be all right. Yeah, but the thing is, the biggest thing is, it's not like, if I sold this, some of these houses in the area have all gone down in price, and so that could subsidize the increased rate. These houses are still going up in value because the supply is so short, especially in more desirable areas, that we're still seeing house price growth despite the mortgages. Because I actually know someone right now who's looking to, they rent right now and they're looking to buy somewhere in this, in certain like North Jersey, and everything is going over asking price because the inventory is so tight for good property. And the thing is that there's no supply. No one wants to give up their sub 3% mortgage. And so, that's going to be tough. And so by continuing to raise rates, I don't know how much that's going to really make someone that is on a 3%, 2.5% mortgage go, right, also, and it's I don't know. But the thing is that let's just see what the Fed does. They did indicate that in the last meeting that they were going to pause and they'll be staying pat for a bit. But obviously things have developed since then. So I don't know. It'll be interesting. But I'll be surprised if they do much more. And I still don't really see the reasoning behind it more than, I think, I was saying it before on this pod, is that the inflation rate was like, 4.5? I don't even know what it was. But if you get one of these credit cards, 2%, 3% cashback, that's down to sub 2%, your inflation right there. My credit card, SoFi, 3% cashback on everything. Just
So I mean, my point of view, there simply just aren't in that many negative catalysts, barring some kind of escalation in the war just out of the blue or something like that.
So I guess they got the free shot.
And I guess, when was peak inflation? Last year sometime, right? The Chinese spending boom that was supposed to happen hasn't been materializing really. And you look at commodities like oil, copper, iron. It's not like everything seems to be kind of on a overall downwards spiral. Looking at copper here, looking at iron here. So
I mean, we're
I
talking
don't
about
know.
nat gas. Like in Europe,
Yeah,
nat gas has gone to is virtually free. You know,
yeah,
in
and
Europe and the UK.
yeah, and this really just shows the free market. Really, when it can, it will, just if they said without Russia, everything's just going to be up into the sky for the foreseeable. But it's actually come down within a year. Everything seems to have just
Yeah,
normalized.
everything's normalized. This is just this all the hype around Russia. Because the thing is that I guess with Russia, they have redirected their supply. So, China's obviously buying some of their oil. India is a big buyer of their oil. So it's not like that supply has been lost. It's just been redirected to different parts of the world. So it's not like there's a supply issue in a certain way. Maybe Europeans and the West have got off the Russian supply, but it doesn't mean the rest of the world has. And in fact, they've garnered quite a bit of support for, because at the end of the day, everybody just wants free stuff. I mean, cheaper stuff. They just want the best deal. They just got to think about themselves. There's only so long you can be righteous for. And then the thing is that, again, some would argue who's saying that what the West is doing is righteous. I don't know. It's just at the end of the day, you see it with airlines, right? And an airline can give you a really bad experience, but they make that flight cheap enough, you're going straight back. That's it. You want to go somewhere, and that airline is that much cheaper, you're just going to go. At the end of the day, price wins the day eventually. So I don't know. It definitely just seems like you're right. I mean, there doesn't seem all the headwinds we talking about Puro Saxana last time, all the stuff, the recession fears, the dis fears, and in theory, in a perfect world, they should have all, everything they say is correct. Half of these actions historically does lead to recessionary outcomes, but I've been saying it for a long time. Unless the labor market starts to tank, you ain't gonna get no recession. Because people might be struggling, but if they got a job and they can pay for it, then they'll be fine. You look at 2008. Previous recession times, you've had a lot of job layoffs, but whereas here, people are still hiring. And where the job layoffs have been more on the tech side, and the people that are earning really, really good money, and they're getting these huge severance packages, and so they're good for 3 to 6 months. And the thing is that they've got good skills, and someone else was employed them straight away. But whereas, if you look at the lower end of the scale, is your Walmart, all of them, they're all still begging for workers because they're just, they're just so busy. You see Walmart's earnings, billions, 150 billion or whatever they made. So it's unless people don't have work, who knows? AI might lead the next recession if people put everyone out of a job, but it doesn't seem like it's happening anytime soon. So that combined with, the
thing is, even if there is job loss, I think that GDP will probably end up growing if AI is the next kind of catalyst, the next S curve up in terms of, the productivity that we could really have as a species. So yeah, how people are going to get their money, I'm not sure, but it could be a major deflationary force on goods and potentially services going forward. So, but again, people are saying this is going to be happening for decades now, but you can actually see
the
that
biggest
this
recession.
is,
it's different something this time.
Yeah, this is different.
And you know what? What's the biggest tell was it? Like, the stock market, it always knows, and the stock market weren't giving it up. You had this move, but it bounced every time. And the stock market, despite all the negative headwinds, how much negative headwinds we had? We've had some of the largest banks just collapse, right? Bondholders been wiped out, shareholders been wiped out, depositors been saved, but you've got them totally taken out to the cleaners. You've had, you've got this debt issue. You've had record high inflation all over the world. You had a supply shortages, supply chain, this, that. Despite every headwind that has been thrown at this market, the market just been going, and then just go up. And then now the big caps are back on it, and then that's it. So just the market sort of told you it didn't give it up, and all those, everyone that's calling for a recession, it made total logical sense. But there's a lot of factors at play this time that were very different to previous cycles, which sort of explain the current situation. Not saying it can't happen, but this is how it seems.
And if you look at how these stocks have, hit their lows, especially in different sectors, it's all been at different times. So, like Tesla, it was, the beginning of the year, whilst, Microsoft was last year, it's in like the end of the summertime, etc. And you're looking at the same in terms of in the economy as well, because we are getting these kind of recessions, but they're all happening localized in certain industries, and it's like that rolling recession that they're talking about, rather than just everything goes to crap all at one time. So the thing is, this is how we could potentially just avoid a recession in general, because we're in the situation where, you know, there's booming markets at different times, and it kind of just all stays around the same. So this is it. And you know, now we're looking at a time that potentially, without all of these negative catalysts anymore, is, you know, is it time to deploy your cash? There are a few people saying now, you know, cash has obviously been the king from being trash, but now it could potentially be a good time to start deploying that cash if you have been sitting on the sidelines. Obviously, we've said that a couple of times, but again, who knows? Something could come out of the blue. But
so the main difference with this one, compared to what you're saying, is that you can sit on your cash at 5%.
Yeah,
Before,
no doubt.
you couldn't sit on you're sitting on your cash for nothing. So the thing is that you know, it all depends where you're on the life cycle, and you know, if you're a bit of older person, just take the 5%, enjoy it. You know, just take it. So you know, there's good arguments for putting it in both things, but you know, 5% ain't nothing to sniff at, risk free. You know, from the almighty US government, and plus everywhere around. It's funny, like in our interactive broker account, you know, just getting such good interest every month on just the idle capital as well. So even if you don't trade, you can have a good return on the year. It's crazy. It's I mean, having
And
this
then, you know,
as a
yeah. The thing is, again, everyone has to make up their own decisions. But you know, if you listen to some of these clowns on TV, you know, you look at in September, you know, Jim Cramer said to short Nvidia, right? And it's since then, you know, again, no one knows what the future is going to be. But again, you can take the signals that we're getting right now, and obviously make up your own decision on what to do. I'm still, you know, pretty long on you know, real world AI, which is obviously Tesla. And you know, you've been seeing what's been happening with Ford, saying that they're going to incorporate Tesla's charging technology into all their future EVs, as well as saying that they're going to be partnering with Tesla to use their superchargers. What Apollo is saying,
they just want to give the choice for both, right? So they can have CCS and that's what you want, because Tesla have the choice. You can have both. So you know,
no doubt. But you know, if you look at what Buddha is saying, how often do you see a big business advertising a competitor's infrastructure or service, right? You know, this is where it's come down to, where, you know, the people who put in the investment at the beginning are reaping the rewards. So we'll see, because then it's like Tesla's not just a car company; it's potentially now a infrastructure company as well. So it's that kind of change in mindset. So looking at full self-driving and where that being a catalyst, still maybe a little bit far away, even though it seems to be getting better and better. I think that
it was meant to be a catalyst 5 years ago.
No doubt. No, what I'm saying is that don't look at FSD to be the catalyst. I'm saying that there's like this infrastructure play, or you know, the mega packs.
You were mentioning it before. Yeah. It's like you've seen Microsoft that went through the roof on this AI. And then obviously we've seen it with Nvidia. Then Google, which was lagging because Bard was rubbish. And all of a sudden, wait a second, Bard is good. Now Google's gone up. It's gone up 30%, 35%.
That is going to happen
as well. Yeah, and then now you look at Tesla, and eventually they're going to go, oh wait a second, the AI is not bad as well. Bang, you know. And
no doubt. I think that it's going to be a massive. Not like it's going to do a similar thing to Nvidia, but only when, you know, Elon Musk, I think, promised this in 2017 or 18 or whatever, that a car can drive from New York to LA completely autonomously. So as soon as that is demoed, right, I think the months after that, there will be a massive run up in the stock. But right now, they can't do it.
I think what happened with Nvidia, it got demonstrated financially. And Tesla's numbers have been very lackluster. And so you know, if they just come up with a quarter where they're like a few billion over estimates, and where these additional revenue streams start to actually show that this is the real deal as a revenue stream, which what's happened with Nvidia happens, you'll definitely see it. And of course, with some with what you were just saying as well. But you know, when it starts to demonstrate financially that some of these other big revenue drivers start to actually show shape, then I think you might see something.
I think that's a possibility, but it doesn't necessarily have to be revenue. You know why? Because look, all it took was Google to just show on their annual conference that Bard is getting good, right, for the stock to run up. It wasn't to do with their specific financials. The same with Microsoft. Obviously, they're killing it. Microsoft doing an amazing job, but it's just showing the potential of this is what it can do in terms of in their Office and Windows suite of products, and obviously how many people they've been able to steal away from using Google by using ChatGPT and similar through Bing, etc. So I think you're completely right in terms of, you know, a massive run up will be, you know, when Tesla can actually show that they're actually, you know, making revenue from FSD, etc. But I think there needs to be like a a public consciousness change in terms of understanding that, you know, this technology is around the corner, meaning self-driving will be pretty much ubiquitous. Because right now, even when you look at Cruise and then Waymo, you know, this is not enough progress for everyone to really believe that they're going to be driving around or being driven around in self-driving taxis. Tech is just not there yet. So again, this might be next year, the year after. I'm not holding my breath on that. But whenever you do see that first video of a vehicle doing that cross country, I think that's the time to, like, you know, potentially pile in, unless there's already been a massive run up in the stock. And Rajan, what's your thoughts on Apple? You know, they haven't been really showing their cards on AI or anything like that. Do you think we're going to have a big announcement from them, you know, kind of trying to compete, because they obviously have a huge amount of AI prowess in the hardware space in terms of on all of the recent iPhones that have their AI neural engines. But in terms of the software to really make use of those, you haven't really seen anything up until now. What's your thoughts?
You know, you just got to assume they do, because if they don't, as an experience, because, you know, like even on my phone and even on like my WhatsApp, there's integrations of ChatGPT, and then stuff like, if you really wanted to use a lot of AI, it's already all on my phone right now. And I don't have an iPhone, yeah. But the thing is that and eventually that will be a much more bigger productivity driver. So you just got to assume that they do. They've obviously got some of the smartest minds. They've got all the money in the world. So I'm assuming they have, because they actually, I read somewhere that they banned the use of ChatGPT, and I'm guessing Google's one as well, on the Apple campus and for Apple employees on their machines, and in use of their own AI version. So the fact that they banned all of that to use their own proprietary version suggests to me that they have something. But you know what it was is, yeah, just be, you know, this is something they got. I get they've got some WWDC thing coming up soon, and then the next quarter, you just got to assume that with everyone coming out with it, that they're going to have to sort of demonstrate what they have, which I'm assuming they have something, because I'll be surprised if they didn't, you know.
And I'll tell you when to short them is if instead of AI, right, like how Microsoft has been focusing on AI in terms of integrating into Windows, making Windows now a potentially like more relevant OS to use than Mac OS. If Apple goes straight into the AR VR thing with just sprinkling some AI bits and bobs around there instead of actually making it a productivity enhancement, then I think then it would be a good time to like short Apple, because it seems like then they could potentially be like stuck in 2021, like where the metaverse and and VR AR was the kind of hip thing, but no one could really understand how it's going to really make things, apart from potentially chilling with your friends or like, you know, having a meeting.
$3,000 is the price of their new AI headset.
Yeah, exactly.
So,
But the thing is, if they've been focusing all on that and not on AI and how it can potentially help people in the here and now on the devices they already have and the whole ecosystem that they already have, rather than having to buy a $3,000 add-on headset that, you know, potentially is not going to fit so seamlessly into your life, I would say then it's a good time that Apple have. Yeah, I mean, what's your thoughts on that?
Yeah, no, I mean, it's right in terms of the stock performance anyway,
Yeah.
right? I'm sure they're going to still do lots of money, but the thing is, everything's forward looking. But again, I would be surprised if they didn't, just because, you know, they've run a pretty good ship, you know. But you know, like I feel like with what they do generally on the hardware side, they always wait 2 generations before they release it themselves. But I feel like if they did that for AI, that would be catastrophic for them, because they've got such a strong iPhone base that half of these people they don't care if they don't have the feature. They just use it for such basic things, and then 2 years later they get it and they're like, great. But with AI, don't think you can do that. Personally,
just imagine what Android, what Google could do if they implemented Bard into Android. You know, obviously Microsoft doing it directly into Windows. And if they're late to the game, I think there's just a lot of wasted opportunity there in terms of like cementing themselves into a lead in that position.
But again, I fully expect that they will. I would be shocked if they didn't, knowing they obviously see everything that's happening around them. Yeah. So,
and with the amount of you know, I guess AI talent that they have, you know, I'd just be so shocked if they didn't, if it wasn't built into iOS 17. I really hope they do.
All right, well, if you like what you heard, please like and subscribe. And we'll be back for the next one. You know, now the earnings season is done. Like, we'll just see what, you know, we'll be looking at all the clues for the ahead of the next one. But yeah, this is a sort of quiet period now for the stocks anyway. So,
okay, and we'll see you guys in the next one.